Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 17th of November, 2021, 6:30 p.m. Central Time. I want you to attend my live webinar tomorrow. So before we get anywhere, if you didn't get the invite in the mail, blocked, you're not on my mailing list, whatever it is, just take your cursor, move it up, move it to the top. An icon will appear if you don't have it there now. Click on it. That's where you sign up for everything. I've made it very easy. We will start at 12:30 p.m. on Thursday sharply. I end at 12:50 p.m. If you have questions, and people are writing them to me, what you want me to cover, now is the time to do it. Please don't do it at the last minute. It helps me to create the charts for you, and we can whip right through them. I'm not surprised to see the copper market break. You're going to say why? COVID-19. It is spreading and hitting Europe hard. I'm sure it's in Asia. We'll hear what the Chinese do about it. It's in America. We're going to get a much bigger spread of it. 54 million people are supposedly going to hit the road to go to grandma's house. And with them, they're going to bring those little boogers with them. You know what I mean through that? And it's just going to spread. Now, does it have to be a disaster? No, it's no different than the flu if you have your vaccinations. For the people that aren't vaccinated, it's a very different story, and it is very, very high risk. You got two different elements here. You got to treat them proportionately. Europe's doing a heck of a job. They're starting again. If you're not vaccinated, you're not getting into my restaurant. You're not getting into a movie theater. They're just saying enough's enough. You have your right not to be vaccinated, but you don't have the right to get other people ill, which means you can't go into public places. Is it worth that? Everybody's got to make a decision. I expect Germany to go that route any moment. Austria's already there. Bonds and notes. I think the market's waiting now. We're in the countdown period where President Biden is about to say, is it going to be Mr. Powell? Is it going to be Ms. Brainerd? But is he going to fill other posts within there? There's a lot of empty slots at the Fed. This is his stage. Put your handprint on it. Get it done, whatever you're going to do. I don't see a big difference between Mr. Powell and Ms. Brainerd, so I don't see a reason to change. The only reason it would be to change, politics, nothing else. Their philosophies are very, very similar. So I think Mr. Powell's done a good job. If he surprised us with some other choice, I think we'd all be floored. And that would be an impact on the market. On the energy markets, you had a big run-up yesterday in the natural gas and the heating oil. So you're backing off in some of these, but it's getting cold. The winter is here. We're going to be in Chicago in the 20s tomorrow. Today we were at 60, so world is changing very fast. On the S&P, a new all-time high. If we were to close just like this, you'd be up another 1/4 percentage point with a new all-time high close. Excuse me, I'm sorry I'm coughing, but for whatever reason it's attacking me again. As you take a look at the bar chart here, just going sideways on this, the pattern is still one of higher lows, higher highs. That's an uptrend, my friends. Now, there is some damage that was done to the chart, and I'll show you what I mean by that. When I take a look at the 18-day average of closes at 46.45, let's call it 46.46. Keep your eye on that for a moment. The Bollinger Band is in play if you want to get up there as resistance, but the market's really gone sideways, and the reason for that is we had lost the bearish momentum. Now, let me just show you what I mean. This is when you lose the embedded reading. The number prior to that, these numbers were just staying over 80. All of a sudden, they pull back, and they don't recover right away. It often leads to price making a run for the 18-day average. If that's not going to happen, you have to prove it by taking out this peak up there, which keep your eye on this because that's going to be quite important. You haven't done it yet. Now I'm at Monday of this week. Both numbers again get over 80. Now you got to do it 3 days in a row. Both numbers over 80 on Wednesday. Whoa. So today, Thursday's trade, if we close like that, you lost the embedded reading, you re-embed, then you're back into play for this, and it's one of those instances you didn't make the run to the 18-day average, which is unusual. However, I use the word unusual. Until we're through tomorrow, the odds still favor that the market wants to pull back to that number. In the NASDAQ, it's not the same, or is it? It is. You lost the reading. You didn't go for the 18-day average. You're not embedding. You're nowhere near as strong as the S&P might be. So we'll see what happens. But take out this number. Means you're not going back there. Could it happen right away? Yeah, but the theory is it's going to happen, at least my theory, it's going to happen right away the way it happened in this market. You lost the embedded reading. This is what typically happens. And the market often makes a run for that number and hits the 18-day average. Well, you certainly did that today. What's the pattern now? None to trade. It's just wandering in here at this point. And you did what I wanted in the Russell. In the Russell, it's the same thing. You had the embedded reading. You lose it. You should make a run for the 18-day average. Now, the other markets aren't running yet to the upside, but they could. And in the process, we know the S&P might embed. The VIX has been useless in helping me get an edge. Are the people buying insurance? Are they not? No, it's just laying here at the 18-day average in a downtrend, but going nowhere up or down. The 30-year bonds, if you watched my SPDR ETF videos, I told all subscribers as the market was coming down in BND and all the other ones that we follow there, that it was a cleaner chart than the futures. They were hitting their lower bands. Said, you got to be out of all shorts on those. And as it turned out, it wasn't a bad move because the market's been coming back up here. Same in the 10-year. We're not embedded. We're oversold in a downtrend. Dollar index, you got up for a little bit here. If we take a look, you closed at 95.40.5 over the upper Bollinger Band. But how many days had we been up? So you were up and over the Bollinger Band. Day 2 here of up and over. Day 3. Day 4. You did it. This is yesterday, Tuesday. Now, what do you think the market's going to do on a day like today? One of the things I told you can do is bet your friend for a steak dinner, are you going to go beyond 5 days? You didn't. I got the steak dinner. I got the steak dinner. That's what we talked about earlier. That's not a sign of weakness. It's a sign of strength, but you typically don't do that. Do I know why? I don't have the slightest idea. Do I care? I could care less. It's something I watch and I learned, and that's how you play those things, so I can get steaks. When you take a look at the eurocurrency, and by the way, I did go out and buy a steak for tonight. As you look at the market coming down, you're moving to the right-hand side. It's just a flip-flop, but these are bearish figures, bullish figure in the dollar. You haven't changed anything. The pound changed. The pound had been nicely acting bearish, and I thought the pros were selling the market, if you will, starting yesterday. And I thought that was a good trade. Today, you get a reading where you're, what? You got a reading of 22. You got to be out. Any reading over 21, to me, got to be out of the game. And if you don't re-embed right away, for those of you Johnny-come-latelys waiting for tonight, the early trade just happened, and the market, as you can see, it didn't re-embed. So the odds favor now. The price is going back to the 18-day average, the red line, to figure out what to do next. Reasons for it? I don't know. You had fear of the Article 16, but more important, now they're talking because of how the numbers are coming out, their economic numbers, that they think that the Bank of England will go to a 15 basis point hike in December. I think it's December 16th is their meeting. It's something like that. But that's been known. So I just don't know. The market just didn't follow through. Okay, that happens. Bitcoin, you don't want to be short this. Why? You've gone from the upper Bollinger Band now to the lower. What do you want to play around with that game for? Out you go. So anyone that was bearish, I think they were covering the market on the first challenge of the lower band. Yesterday's low did not hit this. It just missed that area from what I can see. And guess what you did today? You went there for good measure, and tonight you're rallying back a little bit. That's what I'd expect. Brent versus WTI crude. Look at how the market's staying over that 18-day average. So you probed it, couldn't stay over it, which means Brent's getting a bit stronger than the WTI. But they're all in bear trends, but they're oversold as can be. It's very difficult to be short this market on that type of pattern. Same thing in the WTI. The bear play happened right into the lower bands. Let somebody else trade that. That's not to say it can't go lower. There's no edge in the market when you're oversold like that. Same in the heating oil as far as I can see. And in the nat gas, you had that big pop up. Okay, but you couldn't even get up through the 18-day average. The market's oversold, still oversold, and bouncing around that 100-day average. I'll bet in the end, not right now, cold weather when it comes in lifts these markets. That's the way that I'll be viewing them. Which takes me to my morning subscriber videos for you. You know, each morning I want to be your go-to guy. I want you to wake up, think about the markets, and when you turn on that computer, I want to be the fella you go look at charts at. I think I'm better than most out there. Not ego, just reality. I watch what the others do. I watch people that talk to me. I watch your comments all the time. And I think I call these markets, in terms of chart action, better than most. I don't want to be the guy that places orders for you. I want you to trade through my firm. I'd love you to do that because that's the brokerage that keeps all this going. But on the other hand, what makes those clients come to us is how we work for you in the research, how we work with you on your margins, how we work with you on your commissions, and personal service. We are a boutique firm. We talk to people. It's not, I'm just placing my orders and doing that. Heck, you can do that with anybody, go with them. But if you're looking for the next level, try it. If you haven't had a free sample to my charting service, everything I do, go for it under free offers. If you've already tried it, you can subscribe to this futures research as low as $7.95 for 30 days. I think you'll find it worth the time and effort on your part. And let's face it, it's not a tick in just about any futures market, right? 24 videos a month, you're going to find a lot of information. Go to our website under the word research. It's all laid out there. I'm Ira Epstein. You have a good day.